Have you ever wondered how some people seem to make money effortlessly in the financial markets? Well, it's not magic, it's knowledge. A deep understanding of the Forex market, shares, and financial indices is key. Imagine being able to navigate these complex markets with the confidence of a seasoned trader. Picture yourself making informed decisions that could turn your investments into substantial profits. Intrigued? Excellent. Dive with us into the world of Forex market, shares, and financial indices and unravel the secrets of successful investors. The Forex market sounds complex, right? But it doesn't have to be. Let's break it down and simplify. The Forex market, or the foreign exchange market, is essentially the largest financial market in the world. It's a place where currencies from different countries are traded, just as you would trade stocks or commodities. And the size of this market? It's gigantic, with trillions of dollars changing hands every single day. But how does it work? Well, it's all about buying and selling currencies. Picture a bustling marketplace, but instead of fruits and vegetables, it's filled with currencies from all around the globe. You buy a currency when you believe its value will rise, and sell when you think it will fall. This is done in currency pairs, such as the US dollar versus the euro. The price of these currencies isn't arbitrary, it's influenced by a range of factors. Things like economic indicators, geopolitical events, and even market sentiment can cause the value of a currency to fluctuate. This is where the exchange rates come in. They represent the value of one currency against another, and are constantly changing in response to these factors. And who are the major players in this market? They range from central banks who use the market to implement monetary policy, to corporations who need to exchange currency for international trade, to investors and speculators betting on currency movements to make a profit. Even individuals, like you and me, can participate in this market through brokers. It's important to note that because the Forex market is decentralized, it operates 24 hours a day, 5 days a week. This is because there's no central marketplace, and trading takes place over the counter, directly between two parties, anywhere in the world. So, in a nutshell, the Forex market is a global marketplace for exchanging national currencies against one another. It's a vast, dynamic place where fortunes can be made and lost, but with knowledge and understanding, it can be an exciting arena for financial opportunity. Now, let's demystify the concept of shares. Imagine you're at a large, bustling marketplace. Instead of buying fruits or vegetables, you're purchasing pieces of companies. These pieces, my friends, are what we call shares. Quite simply, a share represents a fraction of ownership in a company. When you buy a share, you're buying a tiny slice of that company, from its assets and earnings to its future potential. But why do companies sell these slices, these shares, in the first place? Well, companies issue shares to raise money. This could be for a variety of reasons. Perhaps they want to expand their operations, invest in new projects, or maybe pay off debt. By selling shares, they're essentially selling a piece of their company to you, the investor, in exchange for your cash. Now let's imagine you've bought some shares. Congratulations, you're now a part owner of the company. But what does this actually mean for you? As a shareholder, you have the right to a part of the company's profits, which are usually paid out as dividends. You also have the right to vote at the company's annual general meeting, where decisions about the company's future are made. However, owning shares isn't just about reaping profits and having a say in the company's direction. It also means sharing in the company's losses. If the company's value drops, so does the value of your shares. This is the risk that comes with investing in shares, the potential for both gain and loss. It's important to remember that the price of shares can fluctuate widely, influenced by a multitude of factors from company performance to general economic conditions. And so investing in shares requires careful research, planning, and a dash of courage to weather the inevitable ups and downs of the market. In essence, shares are a way for companies to raise capital and for investors to potentially profit from the company's success. They represent a partnership between the company and the investor, where both parties share in the risks and rewards. Thus, when you buy shares, you become a part owner of the company, sharing its profits and losses. Ever heard of the term financial indices and wondered what it means? Well, let's unravel this together and dive into the world of financial indices, which are, in essence, the superheroes of the investment world. You see, they provide a snapshot of the performance of a sector or the market as a whole. Imagine you're trying to understand the behavior of a bustling city, but instead of trying to follow each individual, you observe the flow of traffic, the buzz of the marketplace, or the pace of pedestrians. The same concept applies to financial indices. Now, let's break it down a bit further. A financial index is like a statistical measure that represents the performance of a group of stocks or bonds. It could be a whole market like the S&P 500, or a specific sector like technology or healthcare. But how do these indices function? It's quite simple, really. An index is calculated using the prices of its constituent securities, typically weighted by market capitalization. If the prices of these securities rise, the index goes up, and if they fall, the index goes down. Let's put it this way. If you're a sports fan, think of an index as the league table. It shows who's winning, who's losing, and by how much, giving you a sense of the overall game. So, why are these indices so important? Financial indices act as a barometer for market sentiment and economic health. They help investors understand market trends and make informed decisions. For example, if the technology sector index is on the rise, it might suggest that tech companies are performing well. Moreover, indices also serve as benchmarks for portfolio performance. Investors can compare their investments with the index to see if they are ahead or lagging behind. But remember, while indices provide valuable information, they're just one piece of the investment puzzle. It's crucial to consider other factors and do thorough research before making any investment decisions. So, financial indices are essentially a barometer of market behavior and economic health. And understanding them can be your key to unlock the mysteries of the financial market. So, what does all of this mean for you as an investor? It's simple, really. Understanding the Forex market, shares, and financial indices provides you with the knowledge needed to make informed investment decisions. You've now learned the significance of each in the larger financial landscape. By leveraging this information, you can navigate the financial waters with greater confidence. Remember, understanding these concepts is the first step towards becoming a successful investor. Happy investing!